Hollywood's in the midst of a feel-good story in an otherwise dismal environment for many businesses. Movie theater attendance and ticket sales in the first 2 months of the year are higher by double digits, but DVD sales, they could be the spoiler. We go inside the business with Martin Paikonen, media and entertainment analyst with Wunderlich Securities, David Brain, CEO of Entertainment Properties Trust, and CNBC's very own Julia Borson, our media and entertainment correspondent. Welcome to the program, everyone. Martin, let's start out with you. What's Hollywood doing right here?
Well, I think it's all about product right now. And, not surprisingly, some of the best movies from a box office performance standpoint have been very simple, lighthearted, entertaining. Some of the more serious ones, hitting sort of a flat note. I think the economy is certainly part of that. But bottom line, it's about good product. Warner Brothers, as an example, the movie He's Just Not That Into You, again, lighthearted, has overperformed original expectations. Benjamin Button, more serious, dramatic, has underperformed, at least in the U.S.
David, given the product that's in the pipeline, do the good times continue?
Oh, I think it does. I really think the economy is, we expect the current environment to continue for a little while. So too will people's desire to get a little relief from it and go out, do something fun for a low dollar experience and find, as Martin says, a little bit of levity, enjoyment, entertainment, and get away from the news. And that's what's driving it. In addition to content, it's the general economy that's driving it.
Julia, clearly, go ahead.
Oh, no, I was going to say, clearly the entertainment industry, the movie industry has a great advantage now in that going to a movie is very affordable compared to going to a concert or going to a sporting event. But I think we have to differentiate. Movie going is very successful right now, but DVD sales have dropped off. And the studios are in a position where they're trying to figure out what movies are going to perform at the box office and also be able to drive DVD sales like a big movie like The Dark Knight did. But the movies that are big at the box office do tend to do better on DVD, but the studios are in a weak position because they have to compensate for the fact that those library DVD sales, which were like printing money, are no longer around to bolster their business.
Martin, how do they manage that going forward?
Well, I think, one of the things you have to keep in mind on the DVD business right now is that we had an extremely sharp drop-off in Q4. I mean, it was down over 30% year over year. As you look into the new year, depending on the economy, I think we're still going to find that the DVD problems are more cyclical than they are secular. Having said that, I think we're probably still looking at a normalized DVD growth rate that's kind of flattish. And really, it's going to come down to the best titles. Julia mentioned Dark Knight, Iron Man from Paramount last year. Some of these real tentpole titles, as I refer to, are going to drive the business. Those that are more secondary are really going to, I think, fall off more sharply.
David, your company is the largest entertainment REIT. What are some of the pressures you're facing right now that may not be directly apparent by this overall boom in business?
Well, our biggest pressures are probably just capital market pressures like everybody else. We're very well capitalized, we're very low leverage, under 50% in the mid 40s, but at the same time, we do have a line of credit of a couple $100 million with about $100 million net drawn that we have to renew in the first quarter of 2010. This is going to be tough in this environment, yet at the same time, it's very well secured and so forth, and the rate we expect will go up. We're baking that into our numbers, but those are the challenges. Even if you have good properties right now, everything is so difficult that you have to really plan for strain and cost increases and fighting your way through the capital markets at every turn.
And of course, Julia, the capital markets are important. Also, just the financing behind a lot of these movies. They've been creating targeted films because of the lack of financing. Do you see that and the sources that you're talking to as being a sustainable model?
Absolutely. I mean, because so much of the hedge fund and Wall Street financing has pulled out from the studio system, the studios do have their financing for the most part secure for the next number of years. But because they're not going to be getting those additional, say, $3 billion that came in from hedge funds over the past few years, and because we're going to be seeing fewer independent films because of that, everyone is going to be focusing on the sure thing. You're going to be seeing a lot more franchise films, established brands, whether it's the comic book movies or movies based on successful TV shows and books. People are going to want to be placing sure bets. And in this environment, the pressure is on. And so you're going to be seeing fewer films and less risky ones as a way to try to hedge the bets.
How about the 3D films? Are those paying off? Are more studios going to get into that game? Julia?
Well, Rebecca, it was interesting this past weekend. We saw with the Jonas Brothers 3D movie from Disney. Now, the expectations for that film were very, very high. We were expecting numbers as high as $30 million. The movie only brought in $12.5 million, but it also had the highest per screen average per film. And we're seeing another 3D movie Coraline, which was from Focus Features, is holding up quite well. The studios are counting on 3D to drive a lot of growth. It's an experience that can't be replicated at home. It can't be pirated. So if they can get that financing, getting that financing is key to help pay for the rollout of the new 3D technology, then that could be a real boost for the movie studios and the movie theaters moving forward.
All right, thanks so much, Julia Borston, David Brain, and Martin Paikonen.